good afternoon, everyone. This is the voice of Visionex speaking. My name is Samara Nelson, the CEO of Visionex Limited, and I'm here to discuss the entire market with you and what we're expecting this week and weeks to come and what has happened previously. If you can watch most of our videos, you see that all our swing trade videos and analysis has been coming at 100%, and that's been giving me great joy in this market. And without saying much, I need to tell a lot of people this. Trust me, if it is about patience alone, a lot of people would have made millions of dollars or billions of dollars in this market. I think the most important tool psychologically in this business is focus and advanced learning. A lot of people, yes, are patient, but when it comes to that time they need to strike or take action, they don't find the courage, they don't have the courage to do it. So it's not about, a lot of people know, there are some psychological things that people tell you, some analysts tell you, some traders tell you that you just need to have patience, you need to take every action. It's about action also. I believe a lot of people have a lot of people have the zeal to do a lot of things. So let me talk too much. For my own belief, I think what you need to do first is have the basic knowledge and understanding. Secondly, you just have to focus. Don't get carried away. You are on the right track if you are focused and you build a strategy for yourself, because you need to first of all learn to be able to find an edge and find a strategy for yourself that works for you. For us at Visionex here, and for me and my team and my mentees, we are market structure traders and price action traders, and that's the best form of trading so far. But it's very, very, very difficult. It took us years to build, took us years of backtesting, understanding, losses, blow up an account, depression, a lot of things. But here we are today. Go back to our videos and you see accuracies from those videos. And I will say that I keep saying this from the month of June till now. Go and watch my videos. Sometimes I tell you that this trade will hit 2 weeks from now, 3 weeks from now. It comes out 100%. That is because I know I have found an edge and I've found a strategy that works for me. The strategy is the footprints that this market takes, and that footprint is called market structure. This market moves in three forms. Either is trending to the upside, doing his wave to the upside, or is doing his wave to the downside, or is consolidating within a range. So this is what this market does. So if you know that this is what this market does, why are you then blowing up accounts? Yes, it's important because you don't know whatever is happening here in the market. If you look at this is the monthly time frame, then I want to talk about something. A lot of people make a lot of mistakes. They tend not to, look at the monthly time frame because it's too far away. Trust me, you have to do your analysis from the monthly time frame. Yes, it's a long time, but patience, discipline, focus. These are important factors in this business. And a lot of people don't want to, put all these things into consideration. They come in with the mindset that, oh, trading is a get-rich-quick scheme, and they can just bring $1,000, $20,000 in, and they will become millionaires, driving Lamborghinis within a day. A lot of people say this, but I find it funny that people don't take this as a business. Yeah, you want to gamble, you can gamble $10,000 and make $1 million in a day. But you will not get lucky every day because you're competing with more than millions of people. So don't let me talk too much. Let me just dive into the chart. If you know that this market does something called higher highs and higher lows, higher highs and higher lows, then why are you still losing money? Because this is the dollar on the monthly, and I can say that the dollar has been on an uptrend on the monthly and has been there and has been giving you values. Because if you have this on the 1 hourly chart, I believe that you will have been making money every week. Are you getting it? This market was coming to the downside previously. Let me start with the monthly. Then we had a lower high, a lower low, but that lower low was never broken. I don't work with just trend lines. I work with my rectangular line. So since then, I'm just going to do a quick rundown. Since then, this market has been on this, this was a former lower low. Are you getting it? Lower high. We had another break of structure. We give us lower low. We couldn't break this lower high yet. We found resistance. We came down. We didn't break. So we entered into this range. As you can see, we entered into that range. So I'll just take all this off and draw this range. So the market was in this phase since, sorry, I'm using a free version, so I won't subscribe yet. So the market was in this phase during this period of 2003 to 2014. How many years is that? 11 years. Well, you can't wait for 11 years to make money. That's why they say you can go to lower time frame to trend. And I'm doing this because of one or two reasons. I'll give the reasons why I'm doing this. I guess I'm going to the monthly because a lot of us tend to get carried away because of what we're seeing on the lower time frame. So if this was an important area of value, as you can see, because I'm not going to start from the beginning. This is not a training session. This is a top-down analysis session for beginners, sorry, for intermediate and professional traders, not just for beginners, because we had something like this. So in the month of January 2018, if you're not in this market, you've missed. In the month of 2021, if you're not in this market, you've also missed because a lot of people are saying that, oh, why did Bitcoin come down? Did you look at the dollar? The dollar is the direct correspondent of, what's it called? So this trend line, I brought this trend line from all the way from here, and I was waiting for, I was, using it to touch all these touches, and from there, that was where we got this ascending triangle formation that took dollar from all the way from $88 all the way to probably $107, or let me say $103. So if I should put this here, probably this was the first phase we were on since 2008 all the way to 2014 before we broke that structure to the upside and we tested it, got to our target of 103. We tested that structure and we didn't break down. We came back from a double bottom and we moved up, breaking on that structure to the upside. So if I should bring my tool in, you will see that we are currently in this next phase of this structure and dollar is still bullish on the monthly. The dollar is still bullish on the monthly. So don't go and say, oh, Bitcoin is going to go to $50,000 without confirming your structure and how it's trending on the lower time frames. So I'm just trying to show you something because this was an important area of value. We had a previous resistance, 3 resistance, 4th resistance. We broke it on the 5th time. I have a theory on that on my YouTube pages where I told my student that if we come 1st, 2nd, 3rd, 4th, the more we hit an area of value, is support or resistance, the more we are likely to break it. And the 5th time always breaks, which broke. The 5th time broke, we went up, we got to take profit. We came down. This previous resistance now turned support. We have our first support here. We had our second support here, which we broke to the upside. Are you getting it? Definitely we have to do a retracement. So whenever you're doing your structures, start from your higher time frames, please, and don't confuse yourself. Yes, it takes months to happen. Yes, but get a top-down analysis of whatever is going on in the market and what you might be saying. So without to go further, I would just say, okay, since we had this, I will take all these things off. I'll take this one off, take this one off also because we passed that phase. We're in the next phase right now. So take all this off, take all of them off. Take all of this video will be long, but it's very, very important for beginners and intermediate because they lose focus in this market. So today I'm here to talk about focus. I'm deciphering the dollar right now. I'm telling you what might happen as time goes on. So focus. I guess need focus. A lot of movement have happened in the past since January till May. Well, I'll show you something right now. Right now. Why I think if we go down this, we're coming back to our next support of $89. There's a reason I'm going this far. To break down the test, we're coming back to this support. So you should be ready for your gold to spring up. You should be ready for your USD, your currency pairs against the dollar to spring up. Also, your index also will not be left out. But if we break to the upside, we test here, we're going up, we're going further to our next area of value, which we had here. So to our next resistance, which I also tag as an area of value, which we had here. So focus, do a proper analysis before you start guessing where the direction is going. There's a reason, I told you there's a reason I'm doing this video all the way from the monthly time frame. So I'm going to extend this trend line to the upside and, put another one here again to see if I can get something else again, because this was our last lower high. So if we touched here, you should know that we have a resistance, and that resistance here, we should not have, and we broke out from and have an area value here. So whatever is going to happen is supposed to happen internally here, while we then drop to the lower time frame to see whatever is happening. So if this is the case, dollar is at an important area of value right now. So if I should adjust this very well, I'll say dollar is at an important area of value right now. And overall, dollar is trending to the upside. This was a low, then this was a lower high we had. Then this is still a low that didn't break to the downside. My student know that that's a double bottom. And if you break to the upside and we test to take us to another level. That's why Fibonacci is very important in this business. So if you bring a Fibonacci trend extension in and you are a position trader, you are saying that 0.786 was a perfect take profit. So if you watch my November video, this was why I knew that dollar will be coming down to our next support. So I gave analysis that watch your trades all the way from. Go and watch my November 5th video where I said that gold is going to leave all the way from $1,600 to $2,000, which is about 4,000 pips, which took about November 5th all the way to, I think, February, 3 months. As a swing opposition trader, you would have made 4,000 pips. 0.1 would have given you $4,000. One lot would have given you $40,000. That's a lot in this Nigerian economy. So if you're doing a proper analysis, I don't see why you are losing money, because this market never fails. You are the one that is, I always say this market never fails. You are the one that is failing to analyze the market correctly. So whatever is happening here right now is that follow price action now. Follow price action, because if we're approaching an area of value with a higher momentum, we'll definitely break it. But when we approach the area of value, you can see that since the month of December, sorry, if I should open this up, we have our areas already. These are monthly. So if I label it, this was our monthly support or monthly area of value. Let me just, because we have a lot of support and resistance there. So it's an area of value right now. That's our monthly area of value. This is on that monthly area of value again. So I'm just trying to break a lot of things down for you, because a lot of people are getting carried away these days. A lot of people are getting carried away these days. So I'm going to adjust this so that my monthly area of value be off my grid. The label, I'm not doing it to the back to look at the back side, but I know it will correspond to some level. Trying to carry this monthly area of value away from my new trade. So where are we right now? Because a lot of people are calling for higher time frame. Just, you have to flow with the market if you want to make money in this market. We are broken to the upside, found resistance. So definitely what does happen? It's either we'll come back to $1,600 gold to form a double top that will break us down according to a proper area of value, then we test before we can go down. This is what I know. as a market structure. That's why I went to the lower time frame of dollar. So we might come all the way back to $1,600 because whatever is happening here right now is that when we came down here, we can see that the market is stopping here. So the dollar is still in an uptrend and might break to the upside and come back to 1,600. We can get a double top here, then start shifting to the downside again, breaking structure, shifting character to the upside, and supply holds. Then I know that we are definitely coming back to $2,000 area on gold, or $1,000, $100 area on the dollar. So you should be, you should watch out for a proper market structure and don't get carried away, even though you're a position trader or a swing trader, because whatever is happening here right now, you have to be very careful. You have to be very careful. So let's dive in and go maybe to our weekly time frame to see whatever is happening. So on our weekly time frame, on getting to this most important area of value on the monthly, you can see that we were, this was a previous resistance that broke out, came back and turned support. So I consider this as an important area of value for me right now, because if we came down and touched this was our last. So let me bring in my rectangular tool. So this was our last support pad after that break to the upside. So if we had that and we are holding it, why are you still then saying that this market is bearish? So I ask this question again. Is this the end for Bitcoin? I don't know yet. We don't know yet. So it's important that you just follow the market and don't try to assume. People are assuming a lot. I don't assume. I just flow with the market. Trust me. I flow with the market, and that's helped me a lot over time. That's why you see that my videos are coming out accurately. Again, so we have these two places right now on the weekly to deal with. If I should take the monthly off, because that's an important area of value. So take note now, focus. I've taken the monthly off right now, which is an important, what was it called? So the market is trading in between since it broke down to this. And what do you know about market structure? This is a weekly structure I held before. So that we broke down from this weekly structure does not mean that we have changed character to the downside. This is still a structure that we broke out from. Can you get me? So you can see your weekly right now that even though we broke this higher high here, are you getting it? This higher low is our major, we should look out for, not this one before changing character to the downside. So I would still say the dollar is still bullish because we did not break our major higher low yet, which is this one. So since we have not broken it yet, we are still bullish on the dollar. So we are approaching an area right now where a lot of people want to start shorting from and start longing gold from. I will not long until he tells me what he wants to do in this area. I have a reason of going deep into this market for you to see what is happening, because I am seeing a bullish engulfing candle at an area of value on the monthly time frame, on the weekly time frame, also at support, which is followed by a 3 white soldier also. So I should be curious that if this is truly going to start dropping to the downside, why is there 3 weeks of massive bullishness giving me bullish signals? Yes, I know this is an area of value. So when it comes here, give me a bearish signal. Probably I will not be trading much lots in the next 1 week or 2 weeks. So I'm expecting something to happen here on this, previous, what's it called? So this was the previous resistance that broke to the upside, came back and went up. Are you getting it? Now we came back to that area, we broke down, but definitely it was a higher high, so I don't take it as a change of character already until this breaks. Until this breaks, before I will know that yes, we've changed character on the dollar to the downside. Are you getting it? So on the weekly, so we'll test and continue going to $93, even further going down. But for now, I am still curious at what the dollar is still doing. So focus, watch my videos from June, July, August, September, October, November, December 2022. Now we're in January, February, March. This is May, and May is ending in 2 days' time because today is 28th. Yesterday was Children's Day. Shout out to my kids, my wonderful kids. I celebrated Children's Day with them on with them yesterday, and I say I've loved to shout out to because I am traveling right now. I'm in Asaba to witness my mentor, my father, my someone I've looked up to in the name of Right Honorable Sheriff Ogoiwori, inauguration on tomorrow, Monday, as the next governor of Delta State. Kudos to him. So let's continue with this chat and see whatever is going to happen. So I have to go down to the monthly time frame so that a lot of people that are losing focus, because I've been watching a lot of videos, I've been seeing a lot of analysis are saying that, oh, the dollar is going to hang here. Are you getting it? And definitely Bitcoin is going to $60,000, $100,000. It might happen, but don't get carried away. The dollar is still bullish, because if we were to be bearish, we're supposed to break this last lower high. Why are we holding it? This is the third time we're holding it. First one, second one, third one, we're holding it. So for that reasons, I should be very careful approaching this area of value. Are you getting so? To further decipher whatever is going on right now, I've given you 3 reasons why I'm curious, bullish, engulfing, 3 white soldiers. They are all bullish signals and weekly signals, and the higher time frame tends to do what the higher time frame tends to hold. Are you getting so? Whatever is happening here, I'm just going to flow the market. So if I'm going to go further, we have a weekly support here and a weekly resistance. Yeah. Are you getting it? So if this is what we have, we should have to label that, but I'm going to take it off. I'm going to take it off because I don't want you to interfere with whatever I'm doing here. So here right now, whether I like it or not, the market will still move up to this resistance because we're still in a bullish phase. So I'm going to transfer that to the dollar, tell you that dollar is still going to go down, the USD is still going to go down. What's it called? Pounds is going to go down, indices are going to go down. So any pair that is has a direct correlation with the dollar right now are going to go down. So take note, okay? Take note. So let's go further. So I'm going to go to the daily time frame since I've marked out my area of value. So I'm going to pause this first, coming. So I'm back. So if you look at this market very well, you should know that if you're doing your proper top-down analysis from the monthly time frame as I've done right now, you would have known that this was a market that was approaching an area of value and it was coming with large momentum. But when we got here, we started slowing down, breaking structure to the downside. We came here and found support with this, which we tried going back up. We found support again. We're not breaking, we did not break. We found triple bottom. We went to the back to the upside, breaking this previous changing character back to the upside, and we're testing, continue this market to the upside. This market has been trending since 4th of May this month to the upside to the nearest resistance, doing over 1,000 pips to the upside. So if you're a good market structure trader and know what you're doing, why then are you losing money? Because this is a daily chart right now. And you know that from the monthly time frame, this was a major key monthly, weekly resistance, support that's been holding. So for it to hold and changing character as a swing trader for you here, you would have been in massive profit because we took this trade at Vision X. Are you getting it? So we went to the lower time frame, which is the 4-hourly chart, and we were following these market structure, which actually broke to the downside, change character for us here. So if you are focused and know what you're doing in this market, you would have known that this market, when you started coming from the downside, from the upside to the next area of value, started doing all these what's it called? We changed character from here. We came back to retest a fib level, came here, we came back to retest our last area of value, started breaking down to the downside, breaking structures to the downside. When we got to this major area of value, that was when we started consolidating, we broke up, changing character, we're testing this area of value, and we are way up right now. So why then are you losing money if you are a good market structure trader? Because this market is trending as it stands, as you can see right now. So if this is the case, I'm on the 4-hourly chart. The last area we have is this. So after every break of structure, what happens? There's a retracement. So even though a retracement is happening, does not mean that gold has switched back to the upside. So we might come back to this retracement, do another higher low again, then break structure to the upside again. And yes, this is how the market works. So after every break of structure, what happens? After every break of structure, what happens? We have to retrace back to the downside. Are you getting it? Find support. Then continuous market to the upside. So if you focus, you will know that this market has been trending to the upside on the 4-hourly chart. Let it run. Let it run. Let it run. Why are you then losing money? So these are the lessons I just said I should pitch into this trading journey right now, because this is a very, very good structure I've shown you right now, and how the market has been trending overall for the past how many months or weeks since January, and you've been losing focus because you feel like, oh, this market should go and do whatever you want it to do. Because according to this right now, there are many ways you can trade this market. What is your strategy? Market structure trader, every strategy is inside. Every strategy is inside, because I can say that, okay, this is an important area of value again that we broke out from. And right now, we tested that area of value. So are we going to come back to that area of value? That I don't know. Come back to that area of value, continuous market to the upside. That I don't know. Just do it. Flow with the market. But overall, dollar is still bullish on the weekly, bullish on the monthly, but it's bearish on the daily. So we've checked just now. It's bearish on the daily until we break above these what's it called, structure. Then we test that structure. I get to test that structure, continue back to 1,600. So watch out for your levels. Watch out for your levels. Watch out for your levels. It's very, very important. Watch out for your swing. So I'm just going to flow the market with what we have this week. So I'm still bullish on the dollar for this week, as you can see. Still bullish on the dollar overall. I will say, okay, this is the next phase we are working on right now. So if this phase breaks to the upside, to change character back to the upside. So I'm waiting for a retracement, entry, and start going. So I'm bullish on the dollar, bearish on gold, bearish on the currency pairs, bearish on the indices, bearish on the other pairs. So, but now I'm going to dive into gold and the rest of them. But for now, I just want to decipher the dollar for you, show you whatever is happening. I'll be back. Going on a break. Hold on. Okay, I'm back. So the next asset I'll be looking at right now will be gold. The next asset I'll be looking at will be gold. So I'm on a monthly chart on gold. As you can see, gold has been on an uptrend also. Gold has been an uptrend, breaking structures to the upside. And there is something I want to tell you guys. See, wherever you see this, don't take the wicks. Yes, wicks are very important in the market. But don't take wicks. The market loves wicks. So if these wicks has not been taken anywhere, the market will definitely come and take them, because they know that a lot of position traders have their stop losses 2,100, 2,200 area. So they might likely come and take it. Are you getting it? As what's it called? The market might likely come and take all this liquidity at the top. And I'm not saying that immediately taking it, take it very well. Are you getting it? Before coming down. So because the dollar is doing what it's doing, because the dollar is bullish does not mean that other assets might be bearish. Yeah, fundamental factors, other factors, yeah. You have to, before you trade any asset, you have to find out the behavior of that asset first. But according to as a market structure trader, I know that the market must come and break this structure to the upside. I get it, before coming down. Taking all this liquidity is not just immediately, but above it. I get it. Before, break it very well before coming down to change character to the downside, maybe probably come down. No problem. But according as a market structure trader, they will not just leave all this liquidity at the top. These are billions of dollars, trillions of dollars at the top there from 2020, from 2022. They are coming back to take it again. I'm sure. I don't know, but I have that feeling that if this is a break of structure, yes, the market does one particular thing. Take all these liquidities at the top before reversing, going down. That's what I know about as a market structure trader. So this is a monthly. We can use a monthly to judge gold. Gold is very, very fast. No matter how much you have, 0.1 lot account can blow up your account. So you should be very careful as a gold trader. I'm just trying to tell you what I know about gold. So what I know as a market structure trader is that gold will do something like this. Are you getting it? Then I can bring my path to in, take all this market to the upside. They find a means to switch to the downside, changing character here. Give us an entry here. Now come and break the structure. Then we test maybe a financial level. I guess it here, bring us back here. That's what I know as a market structure trader, which is can take up to how many years to happen. I'm just trying to tell you what I know as a market structure trader. So I'm going to pause here for now. Back. Hold on. Okay, so to continue from where I was on gold, so I will just rush the rest of the pairs. These are for position traders. They're structure for position traders. I've seen this many times before. So these are structure for position traders. So I'm just going to dive in and break it down what I'm saying, since I have that in my brain already, that this is what might happen, that gold will not just leave us liquidity to the upside. I will show you a lot of things that you might not know, even as a professional trader trading for years now. So whenever you're seeing a structure like this and you're seeing a trend to the upside, probably we had a lot of people call this a shift to the downside, but that shift has been validated by a lot of people call this a shift to the downside, but that shift has been validated anytime you see this happen. We had a shift back to the upside with this. So this is a break of structure, and I want to show you a pattern that you might have not seen, you might have not known about. This is gold. We had the weekly structure, and this was one of the weekly structure we had, and we bounced it out from this area of value, a previous support, now turn resistance, now broke out, come and turn support again, then breaking structure to the upside again. That means that this market, the gold market, is bullish. I get it. The gold market is bullish, and if I should take this off, I have a pattern. Let me bring a pattern in A, B, C, D. No, these are A, B, C, D pattern. And if you can see this, if you know this, know that this pattern also have something called retracement to the downside. Then we can continue back to the upside. Yes, so let me see if I can find your book. A, B, C, D, definitely will find some kind of images. Look at, are you seeing what I'm saying? It's a bearish harmonic pattern. Let me go back to my gold. Are you seeing it? See if I can format this and change this to white. You will see that gold has a harmonic pattern like this, as you can see right now, which directly corresponds to what you're seeing here. Does it correspond? 100%. Correspond 100% with what you're seeing here, and has a break to the downside. ABCD harmonic pattern. Go and learn about it. ABCD and the trade drive. Are you getting it? Lessons, every other thing, what it does, comes to the downside, we can hold C. There are rules to it. If you see the pattern rules, it has rules. Maybe I'll just read out the rules. Okay, bearish ABCD pattern rules. Point D must be higher than point B. Point D must be higher than point B. Okay, that's first rule. Then in the move from C to D. Okay, hold on. Bring it there. Okay. In the move from C to D, which is this one, in the move from C to D, there cannot be lower lows below point C. There cannot be lower lows below point C. There was no lower lows. Then, and no higher, and no highs above point D. No highs above point D, which we have there. Then, determine where D may complete price. So that's what we're trying to determine right now. Where is D going to complete price? Market structure will come in now after this now. So market structure needs to come in by shifting back to the upside. So I'm going to use the 4-hourly chart to shift back to the upside, or the 1-hourly chart. So I'm expecting what is happening on the, what's it called, to happen right now. So I'm expecting a shift back to the upside like this. Anywhere I see that shift, I'll continue this chart back to the upside. And if it breaks this C, we are in trouble back to the downside. And yes, so definitely we don't need to break C if we have to continue this market structure to the upside, because 1,800 is an important area of value that we need to hold to continue to the upside or continue to the downside. So this is good for you. So I've just shown you something right now. Then D, determine the point D may complete time for additional confirmation. CD may equal AB in time. We should have CD, the movement from A to B, put it to the movement from C to D is almost equal. So there are a lot of structures you have to learn in your head. So if I should remove the ABCD harmonic pattern right now, you will see that definitely we are coming back to market structure, which we have done A, B, C to the upside. So if we do a smaller A, B, C to the downside, we'll continue this market by breaking to the upside, continue the market to the upside. So you just want to learn your market structure, download a lot of market structure. As it stands, gold is still bearish, it's still bullish until we break $1,800 area. Are you getting it? So still bullish until we break $1,800 area. And that's what I'm looking at right now. And aside from that, let's go to our daily structures. This was our weekly structure looking right now. This week is very important because we are at a higher high right now. That we are breaking down from this higher high does not mean that we are bearish already. Good. We still have this structure as we did on the dollar index. Remember, my dollar index was able to break, but held $1,800 and shifted to the upside. And we enter the confirmation entry and continue this market to the upside. So your sharp patterns, your price action sharp patterns, your flag, your ascending triangle, your descending triangle, your inverted head and shoulders pattern, your head and shoulders pattern. There are a lot of them. Go and learn them before you trade. Learning is the process. The knowledge is what conquers fear in this market. And the focus is what brings consistency. And consistency is what we call perfection in this market. That's what brings in your good win rate. That's what brings in your good risk reward ratios. And that's what brings in your overall way you will not blow up your account in this market. So it's important that you take all this into consideration before trading. So whatever I'm looking at right now, this market is whatever is going to happen here this week. And if I go to my lower time frame on gold, you will see that this market does exactly how we have been saying it on the higher time frame. So last week I was talking about, if you watch my last week video and a few days ago video, I was talking about this place being an area of value, swing high, this being a swing high, which is our current resistance right now, this being a swing low, which was broken down from that one swing high or swing low has to be taken. So if I should check it, would I should look for that swing high, swing low formation. Done. Gold. Don't know who is that gold. Okay, we're talking about this swing high, and one has to be taken. This was the swing low taken, structure broke to the downside, respected the structure, and will continue to the downside. That means that that market might definitely do what? Break. That means that these what's it called? Might break to the downside. Is this the structure I was on right now? Okay, I can use this. Let me see. Okay. Hold on. Let me use one or the other two to continue the structure to the upside. So we have a important area of value here, which is a swing high, which if we hold it, will continue to the upside massively bullish. But if we do not hold it, know that a lot of you know that a lot of people have a strategy where they know that definitely the market might reverse from here. How? Because you're looking for an opposite direction where the market might first through. And if I bring my Fibonacci tools in, does it correspond with that area? So the market might still do a fake out to 0.618 Q zone, which perfectly corresponds with a Fibonacci retracement level. So the market overall might come into this Q zone. So I call this a Q zone. Might come into this Q zone between 0.5 and 0.618 on gold. Are you getting it? Trying to, people that does this strategy, I say that this is supposed to hold, take out all these liquidities, are you getting it? Come to the downside, then find a way to shift back to the upside, then find an entry to enter to continue this market upside. So whenever this is invalidated, what do I do? So if I'm playing with the market, I should be cashing to 100, 200 pips on this move to the downside, because as it stands, the market is still bearish coming from the top. So if you look at the top, you are a person that follows the market very well. You have seen that this switch from this double bottom, I guess, and put this market bearish on the 4-hour time frame by coming down, going up, couldn't break above again, coming to break it while they shift to the downside. And since then, we are bearish in the 4-hour time frame. So in the 4-hour time frame, which is a higher time frame structure, which I sold all the way from 2020 because I was waiting for, after this shift, I was waiting for this, and I entered from 2022 all the way to 2021. Go and watch that video. The video is on my YouTube page. Yeah, I switched, what's it called? Did a swing trade from 2020 up to 1945 and a 4.3 risk to reward ratio. I guess in that video is on my YouTube. So on the 4-hour time frame, we're at our 4-hour structure right now, whereby we are expecting this market to either break to the downside. So these are my important trend line right now. So it's either we're breaking this to the, so I'm going to use trend line on this. So it's either we're shifting this market to the upside here or shifting to the downside here. So this is a no trade zone for me. I really say it is. This is a no trade zone for us. This is a no trade zone because the market might just do whatever it wants to, either break to the upside, continue going, we take our entry from here, break to the downside, continue to the downside here before we continue going. So this is my entry to the downside. This is my entry back to this resistance. So this took a short trade we should have going on right now from 1940 to 1900, from 1970 to 2006. So these are how you can trend this market, make money from this market. So I just finished with gold for you right now. So I'll watch my previous video so that this video will not be too long. I've told you about what will definitely happen around this phase, which has happened already. So I'm going to move to my Euro-USD charts right now. So I'm going to start from the monthly again, but I'll rush this. This video is getting too long. So on the monthly, we have been like we've been doing on gold and what's it called, on the dollar. We've been on these tightening where to the downside, which is a bullish continuation to the upside. We can break above this to the upside. So that's a week monthly time frame, and overall the monthly is still bearish Because if I should go very well deep, you will see that, let me delete all this off, low market structure. This market has been trending outside. All this while breaking structure to the downside, and we have an important area of value at the top here, which it has been respecting. Definitely is expected that it will break to the downside. If this held, came down, didn't break, came, retested again. So definitely this was supposed to break of structure. So we're to come back or continue to the downside. That's what I said on the dollar index. So if truly this is a good structure, we have an important area of value right now, as you can see, which is a previous resistance. So if this is a bullish, more engulfing candle on the monthly, bullish engulfing candle on the monthly, is it going to send us down? We don't know. But if we opened up the chart, you see that it's a bullish engulfing candle acting on an area of value that might send us back to $1,600 on gold, or the $1.900 area. And you can see that you're seeing a lot of confidence whereby you need to use your bias and use your focus not to get more. Overall, what is happening on the weekly? That's the monthly right now. What is happening on the weekly? This market actually on that area of value, the weekly broke structure. So a week is a break. I don't care. Break is a break. Broke structure to the upside. This became our last lower low. So if we're tracing back to these areas, no problem, because the dollar is to come back to this area at the top. Remember, I told you that dollar is to come back here. So if USD is retracing to these areas, no problem. So we're going to flow the market. I will not look at the back to whenever it's happening. I'm going to flow with my structures, my higher highs and my higher lows. So the break is a break. If it's going to invalidate, let it come and break the structure to the downside, changing character to the downside here from testing, breaking structure, you can enter, sell to come to the downside. But that's a long time because it's a weekly structure. So we're going to flow the market in the time frame, probably the daily and the 4 hour chart. So in the 4 hour chart, what can you see? You can see that after we got into these areas, actually shifted to the downside. If you can bring my 4 hour chart in, take this off. So when the market got to these areas, what happened after breaking structure? What happened? We actually shifted to the downside because this was our last lower low. So we are trending in between these areas. I guess but overall, what got to this last higher high on the 4 hour chart after breaking to the upside, we actually shifted by breaking the structure to the downside. So after we broke that structure to the downside, with a Fibonacci retracement level, which we took a trade from. Took this trade, I think we took this trade, we traced for 0.5 and did a Fibonacci retracement level, got to our profit target of 0.786 perfectly well, which the market further broke down. So taking this market bit by bit, which we got to 0.786 again, which 0.382 and 0.382 will take us to 0.786. I bring my Fibonacci trend extension in. So you know that Fibonacci trend extension, Fibonacci 2 and Fibonacci trend extension 2 is a very, very key important in this area. So we have to take profit levels. If you watch my videos, you see that these are to take profit. This market has continued trend to the downside on the fall. So I'll look at my daily structures, trend this market to the downside, because if this was a trend to the downside, if this was still continuing to the downside, continue market trend to the downside on the 4 hour chart, and you will never go away. This market came back to 0.5 area again, and it was supposed to do a Fibonacci trend extension to 0.618 area, 0.76 or 0.1, which perfectly got into our what's it called. So we're going to do a fake out all the way down to 1 before finding a continuation back to the upside to our next area of value. So our next area of value, you know that this is our next important higher high on USD. These other ones are internal. So this was where we got our last lower high before we broke the structure to the downside. So since we broke the structure to the downside, that is because our last lower high. So You need to trend back to the upside to be able to, like I told you, get to this what's it called? Get to this area, then trend, or get to this area, which is directly EURUSD, the direct correlation of the dollar. So we might trend back to that $1 area, one area, like we've said on this, what's it called? Dollar index, to trend to that area, then find a way to shift back to the upside by breaking above these areas on the 4-hourly chart. So we shift back to the upside, we'll break, maybe shift back, break structure again, and find internal shift on the 1-hourly structure, able to break, then break, shifting to the upside, and find an entry, then breaking above here. Continue to our next area of value. Then if we cannot come to this area, we'll definitely start shifting to the downside. Okay. Continuous market to the downside. So that's just market structures, trading for you in general. So if you're focused and you know what you're doing and you know how all these things work, why are you then losing money? It's not that you'll not lose money, but at least I'm telling you that with this kind of market structure and market strategy, and you know what you're doing, at least the news should be the only thing taking you out of the market, not really the structure itself, because you should know where you should put your stop loss. You should know that this is a continuation to the downside. If this was really, you are really in this trade, and your stop loss is supposed to be at least above here. Well, usually me, I put my stop loss above here. So from 831 to 883, that's over like maybe less than 50 pips stop loss, 50 pips stop loss. So if you're even using 100 pips stop loss and putting your stop loss above here, are you getting it? This, you would have still been in this market knowing that you are going for a 1-to-1 ratio ratio. For me, sometimes I go for a 4-to-1 ratio, putting my stop loss above here, because definitely this would have been my only kill zone. So $50 pips, 50 pips stop loss on a 1-to-3, 1-to-4 ratio would have given me my good one. But conservatively, this is a 1-to-1, which is a bad one, because this market might just reverse and point to the upside. So this is my kill zone that took me down to this downside. We made these pips on EURUSD. You can go and watch our videos and our trades on our Telegram group. That's how I flow in this market. So I'll continue flowing in this market till I see a switch back to the upside before on the 4-hourly chart, before I become bullish again on EURUSD. Pound USD, GBPUSD. I'm just going to run through. I'm not going to go far. Monthly, we have done that on the, what's it called, already. Monthly is bearish. Weekly is bearish. EST bearish. These are our last one. What's it called? Is bearish. This area of value, you can see areas of value, very, very important. Market structure trader, very, very important. And right now, we've broken structure to the downside already with this. So might be going for a retracement back to the upside, which will enter that AQ zone already. So I'm going to continue to the downside. We don't know. So GBPUSD is telling us that if that's the case, definitely euro and dollar might continue to the upside, like I've told you in our previous video. So if that's the case, GBPUSD might be going back to the downside if this Q zone happens and a switch happens on maybe on a 4-hourly chart here. So I'm waiting for a proper shift on a 4-hourly chart here on this Q zone, because this was our last high. We're supposed to break it to the downside, So if we test this last high right now, market structure trader again. So I'm not trending here. Test our last high and break structure again. Shift and take an entry back to this last lower lows. This is about 368, or let me just say 400 pips, 400 to, that's about 600 pips to the downside, 600 pips to the downside, which might take a week or two to happen. So a $1 account, a 1 lot account on a 1 lot trade gives you $6,000, 0.1 lot gives you $600 on GBPUSD. So I'm massively bearish on GBPUSD right now for breaking this structure to the downside. So it did something I usually call don't enter until you see change your character to the upside. So a lot of people might have taken a buy from this support, like, okay, we broke to the upside already. So you're supposed to hold to come to the back to upside. So you might have taken a trade from here. You see your stop loss below here. Trust me, you still take it down. GAP is bearish. So I'm just giving you BUSD because we are in a Q zone territory on the higher time frame and on weekly time frame. And it's even showing us a sign that it's going to go bearish because the dollar is going to go bullish already on GPUSD. Are you getting? So if I should adjust this very well, it's perfectly adjusted. So GPUSD to me is bearish. A lot of people will say that, okay, oh, this is a bullish signal to the upside because it lent only these signals. They lent only these structures. They will tell you that, oh, a descending triangle and it's very slow is a bullish signal back to the upside. Yes, most of the time, 60% of the time. But you can see that it grinded through and fell down from an area of value. Now, this previous support now has turned resistance to it. So might continue this market to the downside. So don't trust just your price action strategy alone. Learn how to apply market structure to it, because for you to break that and continue breaking structure to the downside, taking all this as liquidity, drawn this liquidity previously in my last month video, even this month as videos I drew this liquidity that gold, GBPUSD will take all these liquidities out. And I even talked about it on my EURUSD that these are all liquidities on my EURUSD, and perfectly well. You can have seen, I believe you've seen the structure before. Perfectly well. This was what gave us more confirmation that this market has broken down to the downside by breaking the structure, testing our liquidity trend line. And if you have just entered the trade from here, you would have just let that liquidity run until this place. So from 1,000 pips all the way to 700 pips, that's 300 pips to the downside, unopposed, untouched, untouched and unopposed, because this market has been bearish to the downside. So this is our next support, major support area of value we have right again. So coming back here, bouncing, changing character to the upside, can enter, but if it does not bounce, break and grind the way GPU is grinded just now, you know what to do already. So this for what's it called, GPUSD. Should I go to AUDUSD? Yes, I have something on AUDUSD. I'm going to tell you. On AUDUSD, go and look for this. It's called drop strategy pattern. Drop pattern. So let me go to my images and see if I will see it. Drop. Yeah, so I'll just see it. Okay, you can see drop is breakdown, retest, drop. We're having it right now. It's very, very large on AUDUSD. So AUDUSD is very, very precise. Drop is breakdown. Don't break above here, drop us down. So that's a drop-based drop strategy. But immediately you are seeing a break above is a fake out. So go to your lower time frames, break this down. You see that until we find a shift on the lower time frames here, that market is, so whatever I'm looking for right now is the market coming back to this area. I guess in there, find a shift, breaking structures the downside, shifting, then I'll take a trade, take it all the way down to our next daily support, which is around these areas. So the markets are very simple. You're the one failing to analyze the market correctly. Whatever is happening in the markets are very simple. A lot of people say that, how do you get up to 1,000 pips in this market? This is how I flow the market. This is how I make my money in this market. You can see that we've never been wrong in our trades. All trades have been given since June 2022 to now. swing trades of 1,000 pips, 2,000 pips have been coming so well. So, same thing happening on what's it called? The same thing happening on NZD also. We're on this resistance now with open structures to the downside. So anything that is making it test the Fibonacci level, or these are what's it called? Testing the Fibonacci level, either a Fibonacci level or this area of value, and dropping again is dropping us up to this next area of value. So I think my next area of value, I drop us to this next area of value. So I'll end this on the dollar pairs here, probably do a USD/JPY trade, and I found a continuation on the USD/JPY trade all the way up to, like, continuous market to the upside, because okay, this is a direct correlation of the USD, US dollar, and I'm saying USD/JPY doing over 3,000 pips to the upside. 3,000 pips to the upside. I've done the analysis down already, so this is what I'm looking at, which you can see here. So I'm not going to go into this much because of the video has become too long. I'm not going to go into this much, but if you can find this wave drawn down already on USD/JPY is about doing, I think about 3,000 pips to the upside. So follow this wave. Follow this wave because let me go to the weekly and just break it down. I think I'll just break it down. For just maybe 2 minutes. 2 minutes. We're not spending on 2 minutes. Oh my truth. Right, so let me see 8 gaps. Okay. See why I said dollar is still massively bullish. When we got to this particular point, area of value, we held it, and since then, I've even entered a trade on USD/JPY, and I think I'm in one of my accounts in about from 135 to 140 is about 500 pips in profit already. I'm taking it all the way to 165, which is about roughly, I'll calculate that pips, calculate it from 130, you can enter from 140 right now, all the way to 165 is about 2,500 pips from where we are right now. We've done 500 pips already. It's about 3,000 pips altogether. For this to hold, we broke an ascending triangle to the upside. Trust me, USD/JPY is going to 165 because this is an ascending triangle. We broke it to the upside, and it's a bullish continuation pattern. Broken to the upside, and we held perfectly well on the 4-hourly chart. So if I go to the 4-hourly chart, you'll see that we held this market structure perfectly well on the 4-hourly chart because we did a break of structure to the upside. So the next trend is coming from here to here. You can see that touched 0.618 already. So I'm expecting a deeper retracement to maybe here, then come down here. You can hold it from 138, we're going to 135. That's about roughly 2,400 pips to the upside. 0.1 lot account, 0.1 lot trade on this trade will give you this very, very huge. 0.1 lot on this trade will give you about $2,800. And 1 lot account will give you about $28,000. So USD/JPY is a very, very good pay. I'm willing to ride on and continue this trade, even though I'm not trading for the next 2 months. USD/JPY has given me a reason to trade because overall this is a bullish continuation back to the upside. The ascending triangle is a bullish continuation back to the upside. This is a very, very good trade. I've been riding all the way from 134. When I watched my 2 weeks video, I think 4th of May video 3 weeks ago, you see that I gave you a signal taking a trade from 134 all the way to even 140. We were supposed to take profit, but are willing to ride this trade as a swing trader all the way to 135, because this is a clear weekly continuation to the upside. Or even take profit at 152. It's still about 1,000 pips to the upside. So that's USD/JPY for you. USD/JPY is very clear. You don't want to trade gold, you don't want to trade Euro/USD, you don't want to trade indices, you don't want to trade USD/JPY is clear. And lastly, let me do Bitcoin. I'm not going to touch indices so that maybe tomorrow I'll do a video again to touch indices. So let me just touch Bitcoin. BTC USD. Let me touch Bitcoin. Bitcoin to me is in trouble. Bitcoin is in massive trouble because whatever I'm saying on Bitcoin right now, taking us to $13,000 again, and if gold continues to the upside, that means this head and shoulder pattern will fail. Because I've told you before that this is what I'm looking at. I watch my videos. We broke out from these and the descending triangle. Right now we're testing it. Going to ABC move to the downside. This is liquidity. So if I go to a 4-hourly chart, I'm expecting if this area of value does not hold, which is this, let me go to the day. Let me show you something. This is either you call it a copper handle pattern. So this is a cup. And wherever you see this, you know that this is a copper handle pattern that if it breaks the upside, it's very, very huge for Bitcoin. So I don't know what Bitcoin is going to do. I don't know if it's going to override the dollar, the bullishness of the dollar taking us to $45,000. But I'm looking at the upside for Bitcoin. But Bitcoin will never do this to the downside, because if it does it to the downside, it's going to take us to $1,500, $15,000 Bitcoin again. Are you ready for that? No. But the only way you can say that Bitcoin is not going to misbehave is this. Let's just hold $25,000. If Bitcoin can do this, so if I take this copper handle off and bring another pattern, bullish continuation pattern in, it will be our what's it called? It will be our head and shoulders pattern. So I should bring a head and shoulders pattern into this chart for you. You will see that this is a head, left shoulder, head, right shoulder, and if it breaks to the upside and we test, which is happening right now, we can retest is happening right now. So we're expecting $25,000 to hold. So whatever I'm expecting right now is expecting $25,000 area to hold to continue this market to $42,000 from. So if I see a shift on Bitcoin on the $25,000 area, which I know that is a break of structure already, and from here to here enter my Q zone, which corresponds with these shifts. Are you getting? I will shift on the $25,000 area, $24,000 area. I'm going to take this market all the way to $2,000, making about $25,000 for 2,000 is about $17,000 in profit. So on the 5 lots, that's 17,000 times 5. That's what I'll make. And it might take time, but I'm a swing trader. I'm willing to wait. So whatever I'm looking at right now is this bearish pressure I'm saying. So Bitcoin is a very, very volatile asset that might take us to $28,000 before coming to $25,000. This is a must, because this liquidities must be taken. This is a must, but it might just from here retrace. So just follow the market as I've taught you on your lower time frames from your 2-hour hourly charts and see whatever is happening. Because if you go to my lower time frame, you can see that this is where we are, but I trust Bitcoin to do this, take this liquidity. This is liquidity. Take this liquidity to the upside, breaking above here, touching here perfectly, and coming down, because this is supply. This is where the whole market started, supplying from. So this is my supply. So I'll leverage supply. So every detail you need to even teach yourself and be a professional trader is in this video. That's why I took my time to break it down bit by bit for everybody. Are you getting this follow chart? This market started supplying all the way from here. This liquidity, and this is a very good market because this is taking the upside, taking the downside, taking the upside, find supply before going to the downside. Don't look for that market structure. This is Bitcoin for you. So I think I'll be trading Bitcoin tomorrow from 27,000 right now to 28,500. Buy, then sell from 28,500 all the way down to $24,000, $25,000 again, making 2,500 to the upside. Sorry, $1,500 to the upside. Then from 28,000 to 20,500 to $25,000, another $3,500 to the downside again before properly taking on that $17,000 to the upside. So This market structure you're seeing here right now is very sweet to me. Whenever I see this kind of market structure analyzed like this, I would like to take it because we have liquidity at the upside ticked. Use the downside before going back to the upside. So these are good for professionals that are in this business already and do so some intermediate, and it's very good for also for what's it called. So if I take this off, I believe you guys have seen this structure before. Take up, take down, and continue to the upside. Liquidities are what makes these market makers, the banks, the institutions, the big ones, the market makers make money in this business. So if you follow their footprint, you will never lose money. But if you continue trying to, have fear and emotions in this business, you lose money. So this video is very important. I've given you all together right now more than 30,000 pips in the month of June. So show appreciation by sharing this video, liking it, and I'll see you on the next one. Bye.